Hello, my name is George and welcome to this particular video. If you've not subscribed to this particular YouTube channel, I really recommend you subscribe to this channel for more educative content. So today I want us to look at the EUR/USD, just try to see what possibly you can be looking out for and what we can be expecting for this particular month. Yeah. So let's get to it. So on the monthly time frame, you remember from last month's recap, if you had watched last month's recap, we were expecting to see the EUR/USD remain bullish and give us more bullish setups. Okay, if you guys remember. So first of all, if you remember in the month of was it April? Yeah, probably. Yeah, in the month of April, we were expecting to see the EUR/USD probably react off from this particular zone right here. We were expecting to see that zone act as a supply to push prices lower, because we actually had an internal structure. We had an internal breakout structure right here, so we're expecting to see this price drop lower and lower. But what happened is price took out the orders from that particular zone that we had marked impulsively. So it means that we're expecting to see price stretch even higher quite impulsively. So once price had taken out these particular orders from this particular supply or had violated the supply impulsively, we're expecting to see price continue stretching higher. That is what gave us what we're expecting next month, and what we're expecting next month ideally is we were looking at seeing price take more buys from that particular supply zone, because once it gets violated it becomes a breaker block. So it's no longer a supply, it becomes what we call a breaker block. So once we had that breaker block, we're expecting price to react off that 50%, and that's exactly what happened. You can see price got into the 50% and we had more buys on that particular from that particular breaker block. So this month I'm also expecting to see a bullish USD on the weekly time frame, on the monthly time frame. So basically when you're getting your directional bias from a higher time frame, you'll have to scale down to lower time frames to find entries where to get in, because ideally you can't execute on the monthly time frame because most people don't have the capacity and volume, funds to trade on the monthly time frame, because it requires quite a huge fund and stuff. You have to refine your entries on a lower time frame, right? So we will be looking at now, we will be scaling down to the weekly time frame and maybe the daily time frame to try and see possible entries we can take to leverage on the same as we try pushing prices higher. Okay, as we try looking for mobile opportunities. So one thing we have agreed is that we are looking for buy opportunities for this particular pair from the monthly time frame. So from the weekly, on the weekly time frame, ideally now you'll be looking on the weekly time frame, try and see possible points you can get in the market. Okay, now when you're scaling down to lower time frames, ideally you're trying to look for what entries. The higher time frames usually give you a bias. Okay, and I usually say the higher the time frame, the higher the precision, or the better the precision. Okay, because most of the time, most of the entries you get on a higher time frame are filtered out entries, and they have less noise. Know if that point is on. Yeah, so let's get into this. So first, from what you are able to see here, from the price action you are able to see on your screen, the current price action is price has already stretched down, and we have already filled orders at the discounted level for this particular one, because price had already gotten beyond the 50%, right? So ideally we have already taken orders from the discounted level for this particular case. So it means we might be seeing price stretching higher and higher to take out the 0% and probably even give us a new high, because when we are looking at price being bullish, it means we are creating new highs all through, right? Yeah, so price is already traded inside the discounted level. So ideally when you're going to look for your entries now, on the daily time frame or whatever the time frame, you ideally are already looking for buys. You're just looking for the next closest demand, or the next closest bullish fair value gap to take your trades off to stretch prices higher. Okay, yeah, and now go down to the daily time frame, which is going to be the last time frame I'm going to be looking at, because this particular video is supposed to give us now a higher time frame recap. Like, we are not looking for specific points to enter in the market. So first is they're looking at the current price action. Of course, we have already said that price already took out orders with the 50% of the Fibonacci, beyond the 50% of the Fibonacci, meaning price might possibly have already exhausted orders from the discounted level. So the next thing is, me, I usually like using the fib when I'm looking at a higher time frame scale, because it ideally gives me what I'm expecting or what I'm looking at, even on discount and premium levels. Because when I'm looking for entries on a higher time frame, I want to make sure I'm taking buys from the discounted levels and taking sales from premium levels. Okay, so for this particular case, you will be looking, or you will be expecting to see, maybe probably, if this daily candle closes bearish today, I'm not sure, I don't know, if this candle closes bearish today, means we will be looking for points to start pushing buy orders off from. Now, the closest point I can ideally look at is, first, you have this liquidity pool right here, but part of the liquidity pool, of course, is in the premium level, so you'll not be taking any trades from that. Now, there's something I once taught you guys, and I don't really recall if I taught you, but I think I taught you guys, that when you go on your line chart, you'll be able to see there's something interesting that really happens most of the times from your line chart, and your line chart will mostly give you very nice entries. Okay, yeah, well, on your line chart, I want you to always look at such kind of levels that are basically rally base rally, or rally base drop, or drop base drop. Such levels, they usually have very nice orders. Okay, so for instance, even here you can see price had reacted off this particular rally base rally. So you first mark that highest point, and then when you come now to your candlestick chart, you mark the highest point of that particular candle. You'll be expecting price to react off from there. I've seen that happen a lot of times, and I don't know why and I don't know how, but I've seen it happen a lot of times. So I've back tested quite a number of times. Now, the other thing I want to show you guys, to teach you guys, is now this. Now, I don't know how this would work or how it would go, but I'm just here to tell you, let's just wait and see how that would go. But this is a drop base drop that was not respected, so ideally you're expecting to see price react off the same zone this particular time again, because ideally it becomes a breaker block. Okay, so it will be the second time price will be reacting off the same zone, because price had already taken orders from beyond the 60% level. So let's try and see if price gets to this particular point. Now, that is a low risk setup, low risk view of the market. Now, this is something you can also be looking out for. On this can be your probably your other low, right? Because price are already gotten here, this can be probably your other low, and this can be your high. So you can be looking for orders or trades from the 61% level for this particular case. So just go on the 61% level, try seeing is there anything that you can leverage off from, and of course, maybe this can be a very nice mitigation right here. So you can leverage from orders around that particular level. That's around 1.31315 or something. You can be looking for orders or buy orders to stretch prices higher from around this particular zone. Take your buy orders, or have your buy limit orders around there to stretch prices even higher. And of course, don't forget where we are targeting. We will be targeting to see prices stretch all the way to take out this particular high, because you're bullish. It means we will be taking out highs probably. Yeah, so you'll be looking at prices probably taking buys from around there all the way to around there. That has been my recap on EURUSD. That's what I'm expecting, that's what I'm looking at for this particular month. If you have any other ideas or any questions, you can drop them down in the comment section. I'll be sure to answer. If you got to this particular point of this video, make sure to subscribe, hit the like button, comment, share, so that your friends also can see what we are looking at on the EURUSD. Okay, make sure to subscribe on this particular YouTube channel, so that anytime we post a video, you do not get or you do not miss out. Yeah, that has been George. I'll see you on my next video. Remember, you're just one trade away from the breakout.